The CNBC app. Global market news in one place. Customizable sections and personalized alerts. Stocks tracking, interactive charts and market insights all in your hands. Stay connected. Stay informed. Download the CNBC app today.
Very well, welcome to this Monday edition of Scorebox Europe. I'm Steve Sedgwick with Karen Cho and also Juliana Tattlebaum on assignment at the trade talks in Geneva. These are your headlines.
The U.S. and China say they have made substantial progress on a trade deal following talks in Geneva, with the two sides set to announce further details later this morning.
I'm happy to report that we made substantial progress between the United States and China in these very important trade talks.
The two sides held in-depth exchanges on trade and economic issues of their respective concern. The atmosphere of the meeting was candid, in-depth and constructive. The meeting achieved substantial progress and reached important consensus.
Elsewhere, President Trump putting pharma companies on alert as he vows to sign an executive order slashing drug prices for Americans by as much as 80%.
UniCredit hikes its full-year guidance after a top and bottom line beat in the first quarter. CNBC asked CEO Andrea Orcel about plans for consolidation in the banking sector.
At this point, I think we are in control. On BPM, we are reviewing the situation, post the value destructive deal on Anima and the demands of the Golden Power, and we haven't made up our mind yet. On Commerzbank, we're exactly where we thought we would be.
Straight to our top story. U.S. and Chinese officials say they made progress in closely watched trade negotiations in Geneva this weekend. The White House touted a China trade deal. That might be a bit premature, but anyway, they touted a China trade deal, whilst Chinese officials said the countries reached important consensus, but neither side has released any details of an agreement. The Treasury Secretary in the United States, Scott Bessent, is due to deliver a key press conference at 8 a.m. London time. Well, Juliana is in Geneva. Juliana, I was looking at a lot of commentary from the Chinese. The market is hanging on the word substantial from Secretary Bessent as well. This 8 a.m. timeline, 57 minutes time, absolutely pivotal for everyone involved.
Absolutely, Steve. When I landed here yesterday in Geneva, it was stormy, the rain was pouring down, and this morning it's sunshine behind me. The rain is gone, and that's similar to the messaging that's coming out of these trade talks. Both the Chinese and the U.S. are trying to send the signal to the market, to the world, that we've got a de-escalation on our hands. But to your point, Steve, we don't have the detail yet. We have almost nothing in terms of the detail. Here's what we do know. Both sides have reported substantial progress. No specific measures have been announced. No mention so far of any tariff reduction. But we do know from the Chinese that they have agreed to create a mechanism for further talks. So that's all we know, literally all we know. And there haven't been a lot of leaks from these marathon talks. The officials met for 8 hours on Saturday at this beautiful gated hilltop villa just outside of Geneva, and then for several more hours yesterday. And I do think it's worth taking a listen to what officials on both sides have said to characterize the talks, because it just emphasizes that the message they're trying to send, the rhetoric, is that things have become more positive. So take a listen to what Treasury Secretary Scott Bessent had to say about the talks.
I'm happy to report that we made substantial progress between the United States and China in these very important trade talks. But I can tell you that the talks were productive.
Now, importantly, we've heard similar rhetoric out of the Chinese. To your point, Steve, I was also scouring the Chinese media this morning to try to understand how they're characterizing the conversations, and they also are pointing to a positive tone out of this weekend's talk. So take a listen to what He Lifeng, the Chinese vice premier, had to say.
The two sides held in-depth exchanges on trade and economic issues of their respective concern. The atmosphere of the meeting was candid, in-depth and constructive. The meeting achieved substantial progress and reached important consensus. The two sides agreed on establishing a China-US consultation mechanism for trade and economic issues, identified the lead persons on each side, and will carry on further consultations relating to trade and economic issues of their respective concerns.
So what should we take away from what we know so far around these talks? Well, number one, it clearly marks a change in tone. Until this weekend, there were very few signs that either side were willing to come to the negotiating table. So clearly that has changed. The signaling has changed. But when it comes to the detail here, effectively, right now, we are looking at an embargo on trade, 145% tariffs on Chinese goods, and China's got 125% tariffs on U.S. goods with exemptions on both sides. So effectively, trade has come to a standstill. So the question I think investors are asking now when it comes to the fundamentals here, what's the tariff level that would get trade going again? Is it 80%? Is it 60%? Is it 50%? And I think that's going to be key when we listen to the press briefing that, as you said, is coming up in about probably now 54 minutes time. Do we have a reduction in tariffs? Do we have a pause, or do we simply have a commitment to speak further? And I think that's going to determine whether the early rally that we're seeing in markets actually sticks.
That's unarguable, absolutely. Look, stay with us because we've got a brilliant guest now to add more context to this. Ignacio Garcia Becerro is the former senior EU trade official and non-resident fellow at Bruegel. As I say, Juliana will join the interview as well. Ignacio, thank you very much indeed for joining us. Look, a very simple opening question. What do you make of what we've heard so far? What do you think we're going to hear at this 8 a.m. press conference?
Thank you very much for having me here. I agree that perhaps the most significant thing that we know now is that both sides are interested in changing the tone in terms of how they present their trade relationship. I think the critical issue on which we should have more information later today is this just an agreement to talk? Is this an agreement to set up a consultation mechanism and perhaps a work program about the issues which are going to be discussed? Or are we going to be seeing concrete steps in terms of de-escalation of the level of tariffs and other measures that have been adopted by both parties leading to this mutual trade embargo? So that's what I think we will really need to look into the details. Are there going to be some reduction in the 20% tariffs that the United States introduced because of fentanyl? Is there going to be any commitments by China to tackle further the issue? Is there going to be any kind of reduction on the reciprocal tariffs? Perhaps this idea put forward by President Trump of bringing the top level to 80%. So I think on all of that, we would really need to get, hopefully we will get more details later today.
President Trump on Friday flagged that 80% level. He posted on Truth Social saying 80% sounds about right. But what about trade? What will it take to get trade going again? Because at current levels, we've effectively got this embargo on trade from both sides. What is the level that gets companies trading again?
I think that one needs to bear in mind the huge complexity of the different level of tariffs that have been introduced on U.S. China trade. I mean, there were the 301 tariffs that were introduced by Trump 1 and were continued by the Biden administration, and which range from 7.5% to 100% for e-vehicles. Then on top of that, there were the 20% tariffs introduced because of fentanyl. And then what originally was supposed to be a 34% tariff or because of the reciprocal tariff was escalated to 145%, 125%. I mean, I would expect that what would come out from this discussion is not just one uniform tariff level, which applies to everything, but perhaps different tariff levels depending on the sensitivity of different products. So I could imagine that the top level could be 80%. Although that would be, by the way, lower than the current level that applies on the e-vehicles, which is actually 100% already by the Biden administration. So let's see what happens in that particular sector. But I would expect that from some of the sectors where the trade with China is less sensitive, you could be seeing the lower tariffs, perhaps something around 20%. But it's all of this is speculation. We would really need to see what is announced today, because I think it would only be a first step for further discussion that would need to take place by both parties. By the way, I think it will also be interesting to see where, apart from tariffs, any kind of de-escalation takes place on issues like export controls. I mean, China, as a retaliation to the U.S. tariffs, introduced wide export controls on critical raw materials. It will be interesting to see whether there has been any progress on that issue.
Right. Ignacio, I take your point that we are dealing with just multiple scenarios here, and the different tariff levels we've seen discussed even since Friday does suggest that there could be many outcomes here. But I want to get to the lasting damage here, because even though it's been a very short period of time we've been talking about with this effective embargo, the reality is on the ground there have been moves afoot to change supply chains. The FT is running a piece today suggesting that the Chinese are trying to purge themselves of foreign parts, foreign components in the supply chain. We know that there's been more transshipment to other places across Southeast Asia. Do you think any of these scars could be more permanent, even if we're talking about a short-term window here?
Yeah, I think that the uncertainty and the disruption that has been created is something that inevitably business now needs to integrate into their planning. So I think that this is a damage which has already been done. I mean, let's see to what extent the de-escalation is sufficiently significant, and let's also see what are the type of issues that the US and China are going to be discussing, because this is going to be a long process. It will take quite a few interactions before a real trade agreement can be reached. This is going to be basically a managed trade approach, purchase commitments, export restrictions. That could be one potential approach to try to tackle the issue of the deficit. Is it going to be much more trying to tackle the real structural problems relating to China, where there is the issue of their macroeconomic imbalances, or where there are issues relating to subsidies, state-owned enterprises? To what extent these structural issues are going to be at the center of the discussions between the United States and China? All of that, I think, is going to be very important, and we will need to see to what extent there are more details in what is announced later today.
Yeah, because Ignacio, we all know, don't we, that there's a massive difference between an all-encompassing FTA and a sticking plaster trade deal. Let me move the conversation on, if I may. You are a former EU negotiator as well. The EU has set out its stall. I saw the 218 pages of products that could be set to have tariffs in retaliation. It was an extensive list. Is Europe going to get left in the cold if it's not careful, with deals being done elsewhere?
Well, I think that you mentioned an FTA, and it is very clear that an FTA is not an option which is seriously being considered at this point in time by the United States. What I think is going to be critical for Europe is that any discussion and any negotiated outcome has to be balanced. And I think, by the way, this is also going to be very important in terms for China, in terms of the outcome of its discussions with the United States. So I think that, in my view, what Europe needs to do is to show that it is ready to find a balanced agreement with the United States that tries to tackle some of the concerns that have been raised by the US, but to also be very clear that if it is not possible to reach a balanced agreement, the European Union has retaliation options. Now, the choice has been not to exercise this option of retaliation immediately, as China has done, but to keep this in reserve. But for me, it is very clear that if it's not possible to reach by the July deadline a solution which is balanced, then probably there will be no other option but to retaliate.
Ignacio, thank you so much for joining us today. Ignacio Garcia Bercero, who's the former senior EU trade official and non-resident fellow at Bruegel. Well, coming up on the show, OpenAI reportedly looks to Microsoft for fresh funding as it eyes a possible IPO. Plus, UniCredit raises its full-year guidance after an 8% jump in first quarter net profit. We'll bring you highlights from our conversation with CEO Andrea Orcel. And we'll get another take from the C-suite with M&G CEO Andrea Orcel. That conversation is coming up at 7:30 London time. Big hopes now hanging on trade conversations between the US and China. Going into the weekend, though, there was somewhat of fatigue setting into those US markets. And don't forget the long end of the curve again saw that rise in that 30-year yield. So a bit of a steepening again in the US Treasury curve. So markets in that Friday session patchy. You could see the Dow losing steam down 1/3%. Declines on the S&P 500, faint redding, but still red. And you can see the Nasdaq fairly flat. Some big moving names to the downside. Some of these big tech names, Nvidia, for instance, in the trade. Amgen, one of the other ones, losing some steam. I want to take you to what we're seeing out of European futures this morning as we gear up for, again, more news flow out of the US and China and just how much progress was made in Geneva over the weekend. So it is a big hour as those futures count us down to the start of the Monday session. You can see we're perched higher and some of these markets have been outperforming last week. A bit of a divide just in the European markets itself. We saw the overall benchmark tracking higher thanks to gains in both the DAX up 1.8% for the trading week and also the Italian stock market 2.7% bounce, in contrast to losses of both the FTSE and the CAC, the French market. So very different fortunes just in those European markets as we're set up for, again, much stronger gains on the Italian and German stock market. I want to take you to what we're seeing stateside, those US futures. The early picture is stronger, so some of the trade progress that has been cited over the weekend is just coming onto that positive sentiment stateside. So we're seeing up more than 1% on the S&P 500. The Nasdaq in particular seen strong. OpenAI is reportedly in negotiations with Microsoft, which could unlock new funding and allow the ChatGPT maker to launch a future IPO. That's according to the Financial Times. It says Microsoft is offering to give up some of its equity stake in OpenAI's new for-profit business in exchange for access to technology developed after the wider contract between the companies expires at the end of the decade. In the world of startups, vibe coding has been increasingly in focus as AI-powered coding tools gain popularity. Well, CNBC's Ernestine Sieu has tested it out for herself and joins us now. Ernestine, great to have you with us. Firstly, what is vibe coding? Just unpick that for us.
Hi, Karen. Good morning. So vibe coding is essentially it's coding with the assistance of AI. So today there are some AI tools on the market such as Cursor and Replit that are allowing even non-technical people to build fully functional apps and websites. And this is very exciting. It was actually popularized by the co-founder of OpenAI, Andrea Orcel, back in February. And essentially, Silicon Valley and beyond has gone berserk over it because it's really changing everything. It's changing how Silicon Valley is building. It's also changing the startup industry in general. It's changing how, it's changing also how software engineers are working. So ultimately, I think that it's really exciting, and I wanted to find out more for myself. So I decided to join a 2-day boot camp, a vibe coding boot camp here in Singapore called Code with AI in order to learn more and try it out for myself.
Ernestine, that is fascinating that you did take the boot camp, but just tell us, what does this mean for startups? Because there's a huge industry now gearing itself around the AI developments and hoping to come up with their own business models.
Yeah, that's a great question. So I think it's going to mean two things for startups. And that's because in practice, these AI coding tools today, instead of actually needing to actually sit down and write out the code line by line manually, today these AI tools will code for you. And it will code for you just based off of the prompt that you give it, right? And usually these prompts are just written in natural language or in plain English. And so I think that for startups, it's for experienced engineers, it's only going to 10x their productivity and their efficiency. And so because of that, I think that startups might not need to raise as much money because they won't need as much technical talent. So I think we're going to see a rise of bootstrapped and seed-strapped companies. And for people who maybe are not technical, people who are aspiring entrepreneurs, and have felt held back by their lack of technical knowledge, today I think AI has become a massive unlock. It's allowing them to also at least get started, right? And by the way, a lot of these AI tools are free to use online. So as long as you have access to the internet, it's something you could access right now. So I think that we're going to also see a rise in the amount of startups that can be built. And ultimately, I think that it's speeding up innovation, and it's also making innovation more accessible to more people.
Ernestine, you have to sign me up for the next boot camp. It sounds fascinating. Thank you so much, Ernestine CEO, this CNBC.com reporting for us. And for more from Ernestine's piece and to find out how to learn vibe coding yourself, you can head online to CNBC.com.
Okay, this is massive news for the pharma sector around the world this morning. US President Donald Trump said he will sign an executive order to lower the price of prescription drugs to levels paid by other high-income countries. Trump said he would implement a most favored nations policy in which the United States will pay the same price as the country which pays the world's lowest drug prices. Wow, vowing to sign the order today. Over various administrations, Karen, this has gone back and forth under the Trump administration. There was the pharma industry hit back, then the Biden administration, and there was a clause put into the IRA to negate some of the worst concerns that the pharma industry had on this one as well. But this is dramatic from the industry and actually goes back to a key point that American citizens have been bemoaning for a long time. Why do Americans pay such extraordinary prices for their pharmaceuticals compared to other nations? And it is a stunningly valid point. The industry blames the process. They blame the middlemen to a certain extent, which I would argue that the middlemen are a key part of their selling of the products. But the other thing I wanted to add into this one as well, and it's a conversation we've had in the last couple of weeks, and that is about Mr. Trump trying to reshore pharma activity and, of course, the investigation going into pharma practice and where pharmaceutical products are made. If the industry suffers the double whammy of having to reshore product manufacturing back to the States and the cost that involves, plus getting dramatically, and we're talking about as much as 80% lower drug prices, this is a dreadful scenario if it does transpire for this industry.
Well, Big Pharma has tried to be on the front foot and they've been negotiating with the Europeans trying to lift pricing in Europe, which I think is fascinating because if you look at the devil in the detail around the most favoured nation policy, I don't think that they will be off scot-free just because Europe raises its prices and the US then gets the pricing that the Europeans have been paying. The most favoured nation suggests if there's somewhere on the planet that the pharma price is cheaper than the United States, that is the price that Trump wants, not a European price. So again, any bargain basement pricing on drugs, as we know, could be detrimental to the industry, not just on profitability as they talk about the long-term investment needs around the drug discovery process.
And there is a lot of validity to that latter point. I mean, this isn't a slam dunk in either direction. I think it's a very nuanced situation because it is not the generic players who very often are making the key R&D decisions. We've both seen the billions spent by the Pfizers, the Eli Lillys, the Glaxos, the Astras of this world on drug development. And then when they lose patent, it's an open free-for-all as well. So I think the R&D argument is a very key point. But of course, the United States will want that R&D to be done in the United States. So I'm fascinated to see what the executive order says. I'm fascinated to see what the reaction from the pharma industry, which has had plenty of time to lobby on this one and has been lobbying for decades to keep the prices where they are as well. Be interesting to see whether there is some form of quid pro quo with more manufacturing coming back at the expense of the prices for the consumer ultimately.
Well, that seems like the obvious negotiating tactic, right? Bring back some facilities and then we'll cut you some slack. But the reality, if the pricing is going to be the issue, if that's going to be the negotiating point, does that mean all prices come down or does it mean all prices go up? Because there could be a reality that some of the developing nations don't get the cheaper drugs that they've been offered in recent years because they are concerned that the US prices, which is of course is a mass market, could come down. So that would be incredibly detrimental for developing countries if the price structure was raised.
Safe to say the declines we saw in Asia on pharmaceutical stocks between 2 and 5% easier, that is being replicated. We understand Frankfurt listings of pharmaceutical stocks cooled down between, you can see 1.2% there and indeed 5.2% for Novo Nordisk, which of course is the greatest roller coaster ride in drug world of any of the stocks at the moment.
Yeah, healthcare names, there's some big decline stateside as well. So we'll look for those reactions here and the European market open.